In this video, I'll analyze the Q1 FY26 result and concall of all the AMC companies like HDFC AMC, Nippon AMC, Aditya Birla AMC and UTI AMC. Okay, so let's start with the industry overview and the business model. Like we all know that what these companies are doing. Like we all invest in mutual funds, so we all know what the business model is. So let's talk about the main parameters in this industry. The main parameters in this industries are, first is the AUM. Okay, AUM is the most important thing. The company which is growing their AUM at a higher pace, obviously the company will be the winner. So that is the AUM part. AUM is the most important. Then comes revenue, then comes SIP contribution, SIP growth. So that is on one point. And one another thing which is important is the equity mutual fund share, because if we look at equity mutual fund expense ratio of equity mutual funds, it is higher than the other category like debt fund, hybrid fund. So the company who can grow their equity mutual fund at a higher pace, obviously they can get a higher yield, higher overall yield. But again, if I talk about the industry, AMC business, asset management business, is all about the volume. It is not about the yield. If you get 1, 2, 3, 4 BPS of extra yield, it will not make a huge difference. But it is all about growing your AUM at a higher pace. It is all about increasing your AUM size. So that is the important thing in this industry, that which company is growing at a higher pace. It is not about a yield game, it is about the growth in terms of the AUM. Okay, so that is the point here. In terms of this 4 company, if I look at their AUM wise ranking in the industry, then HDFC AMC comes in the 3rd position, then Nippon AMC comes in the 4th position, then Aditya Birla AMC comes at the 6th position, and then UTI comes in the 7th position. So that is the AUM wise ranking of these 4 companies. And in terms of the, if we look at the industry wide, the whole industry AUM in this quarter, the AUM, overall AUM for the industry grew at a rate of 22% at an overall level. It means that equity plus debt plus hybrid and all. So overall level, industry grew at a rate of 22% year on year in Q1 FY26, and then equity portion grew at a 24% year on year. So that is the industry thing, and we have to find out those company who are growing at a higher pace than the industry level, because if a company is growing at a higher pace than the industry level, obviously the company is getting the market share from the other companies. So that is what we have to find out in these 4 companies, that which company is growing at a higher pace than the industry level. So that is the thing. But if we look at the industry, this industry was growing at a rate of 40-50%. I mean not 40-50, but at around 30-35%. If we go 2, 3, 4 quarters back. So that is one important thing, and the reason is absolutely simple, that the market, if we look at the market is not going anywhere. So that is the reason why the industry has slowed down over the last few quarters. So that is one point. That is why in all of this company, if we look at their past growth versus current growth, it will be less, obviously because of the market condition, and obviously if the market recovers, the growth will again improve. So that is one point we have to keep in our head while analyzing this industry. Because if we look at, let's say our AMC company has around 1 lakh crores of AUM, okay, and if the market grow by around 20%, then obviously the AUM also will grow at a rate of 20-25% during that period. So that is what is happening in this industry, that as the market has been little bit slow if we look at past 1 year. That is why we can see all the company AUM growth of all the companies are slowing down. Okay, so that is the thing with the industry. So let's talk about the first company, HDFC AMC. So in this quarter, HDFC AMC grew their AUM by 21%, grew their overall AUM by 21%, which is little low in term, little less in terms of the, if we compare it to the industry level. If we go 4 quarters back, then this company was growing at a rate of 40-50%, but obviously because of the market condition, it has slowed down. So that is the point I was talking about in the last point. So that is the point. But obviously, if the market recovers, the growth will again go up. The growth again can go up to 30-40%, obviously. So that is what we have to track. That is the thing with the AUM. In terms of the equity mutual fund grew at a rate of 22% in this quarter. So again, if we look at the industry, whole industry rate, in terms of the equity mutual fund, whole industry level, equity mutual fund grew at a rate of 24%, whereas with HDFC AMC, equity mutual fund grew at a rate of 22%. So it is not very good, because obviously they are losing the market share, and I could say that it is flat year on year, but yeah, obviously the growth has been little slow in last few quarters against the industry level. So that is one another thing with the HDFC AMC. In terms of the SIP inflow with HDFC AMC was pretty good. SIP inflow improved by 28% year on year. So that is a very good number, I would say. In terms of the revenue, obviously if the AUM slows down, obviously the revenue will slow down. That is the obvious fact, because it is the revenue is the I am not getting the word, but AUM, if the AUM grows at a higher level of 40%, 50%, obviously the yield, if the yield stays stable during that period, the revenue is going to grow at a 40% rate. So that is why I am saying that thing, that revenue growth is the byproduct of the AUM growth in this industry. So that is why you could see one thing, that with all the players, the AUM growth has slowed down. So obviously the revenue growth also has slowed down, okay, with all the players in this industry. So that is one thing with the revenue growth. So revenue in this quarter grew by 25%. So that is the point. And if we look at the past, then obviously the revenue was growing at a rate of 35-40%, because of the, as I said, the AUM growth was higher back then. In terms of the EBITDA margin, I would say they are doing a very good job, because if we look at their past performance, like if we look at 2 years back, then the EBITDA margin was at 75% level, around 75% level. But now if we look at the EBITDA margin, that is around 80% level. So they they have improved their EBITDA margin from a level of 75 to 80% over last few years. Few means 2 years. So that is one important thing, and that is a very good thing that they are improving their EBITDA margin. But again the question is there any room to improve that EBITDA margin or not? Because 80% EBITDA margin is really high. So that is one point with the EBITDA margin. But again, they have been able to improve the EBITDA margin at a higher level. Okay, so that is the thing with HDFC AMC. In terms of the PAT in this quarter grew by 25% year on year. So in terms of the PAT growth, that was good enough, I would say, good enough. So that is the thing. In terms of the valuation, if we look at the HDFC AMC's valuation, PE is at 50x. But if we compare it to other company, which we'll look at in the next few minutes, so then we'll get a better view in terms of the valuation. So that is the thing. So PE of HDFC AMC is at 50x. So that is the thing. Let's compare it to other companies in few minutes. So in terms of the whole company, the company is doing well. I will not say that it is not doing well. It is absolutely doing well, no doubt about that. But let's compare it to other AMCs. So let's talk about the Nippon AMC. If we look at the Nippon AMC, Nippon in this quarter grew their AUM by, just a minute, in this quarter Nippon grew their AUM by 27%, which is really good. If we look at the other players, like industry grew at a rate of 22%, Nippon grew at a rate of 27%. And if we compare it to HDFC AMC also, HDFC AMC's AUM grew at a rate of 21%. So Nippon obviously grew at a much higher pace than the industry and the HDFC AMC also. So that is one thing. And if we look at the whole industry, Nippon has been the fastest growing AMC in Q1. Okay, and if we look at other last few quarters also, Nippon has been the fastest growing. So in terms of the top 10, okay, top 10 AMC, so that is one thing, and that is what we have to look at, that who is the winner, who is growing their AUM at a higher pace. Here Nippon has been growing their AUM at a higher pace for last few quarters. Like when the market was all right, if we go 4 or 5 quarters back, Nippon was growing at a rate of 50%, 45-50%. So that is one thing with Nippon. So Nippon in terms of the growth has been doing really well. So that is the point. In terms of the equity mutual fund also grew at a similar rate of 27%. And also if we look at the industry level, it outperformed the industry in Q1. So that is the thing, which is again a good thing for our AMC business. In terms of the SIP inflow, SIP inflow improved by 30% year on year level, which is again very good. If we look at HDFC AMC, HDFC grew their SIP at a rate of 28%, whereas Nippon outperformed HDFC AMC in terms of the SIP inflow also. So in terms of the AUM, in terms of the all the main parameter, it is doing good. In terms of the revenue, it was little bit low in Q1. Revenue grew by 20% year on year, so that is little bit low. But again, if they can grow their AUM at a higher pace, maybe and should be in the future, they should catch up to their AUM growth. AUM growth. So that is the point with the revenue growth. Revenue grew by 20% year on year. So yeah, that is the point. In terms of the EBITDA margin, in this quarter they improved their EBITDA margin by 150 bps, which is pretty good. Okay, and if we look at their past performance also, they have been doing a EBITDA of 64 to 65% over in the last few quarters. Okay, so that is one thing. Should they improve their EBITDA margin? Yes, there is room to improve the EBITDA margin. Obviously, if we look at HDFC AMC, then obviously the EBITDA margin should improve from here. But we have to look at that how this business goes in the future. So that is what we have to look at. In terms of the PAT, in this quarter they grew their PAT by 19%. Okay, so in terms of the PAT also, that was little bit low if we compare it to the AUM growth. Okay, so that is the main negative things are this, that the revenue growth and the PAT growth. Okay, in this quarter for Nippon, the negative things are the revenue growth and the PAT growth. But if we look at their AUM growth, that was pretty good, and they have been doing pretty good in terms of the AUM growth. And as I said, in this industry, the growth, the volume is the most important thing, that how a company can grow at a higher level in terms of the AUM. Then obviously that yield will play their role. So that is the different point. But 1, 2, 3 bps of here and there in terms of the yield is not going to make a huge issue in terms of the revenue or in terms of the PAT. But the thing is that how you can grow your AUM at a higher pace. So that is what is more important here. In terms of the valuation, Nippon is trading at a rate of 40x PE. So in terms of the valuation also, I would say it is on par because the company is growing at a 27% rate and growing at a much higher pace than the industry, and is the fastest growing AMC within top 10 AMCs. So in terms of the valuation, I would say valuations are fairly good and fair. Okay, so that is the point with the valuation and with the Nippon AMC. So let's talk about the Aditya Birla AMC. In this quarter, Aditya Birla AMC grew their AUM by 15%. Okay, by 15%, which is again, if we look at the industry level, obviously it is very average. If we compare it to industry grew at a rate of 22%, whereas Aditya Birla grew at a 15%. And if we look at their total AUM, they are doing some PMAs, alternative investment funds. So if we look at their total AUM grew at a rate of 20% in this quarter. But if we look at the mutual fund AUM, then that grew by 15% in this quarter. In terms of the equity mutual fund, what to say about that? Equity mutual fund just grew by 7% in this quarter. 11% in this quarter. Okay, so it is very low if we compare it to industry or even HDFC or even Nippon. So that is the point. In terms of the SIP contributions was also low. SIP contributions grew by 5% in this quarter. In terms of the revenue also grew at a much lower pace of 16% in this quarter. And if we look at their past few quarters, they have been always a company with a growth of less than 30%. So obviously I would say it is not a good company in terms of if we compare it to HDFC or even Nippon. So that is the point with the Aditya Birla AMC. In terms of the margin, if we look at their margin, margin has been in the range of 55 to 60% in last 2 years. So that is the point with the margin. Margins are fairly stable, they are not growing, so that is on again a negative point, not a good point. In terms of the PE, if we look at their PE is around 24x. So in terms of the whole business, if we look at the whole business, it is not doing really well. If we compare it to industry or Nippon AMC or even the HDFC AMC. So that is the point with the Aditya Birla AMC. In terms of UTI also in the similar category. In terms of the mutual fund AUM grew at a rate of 16%, which is fairly low. In terms of the equity mutual fund also grew by 7%, which is nothing to say about it. So in terms of the SIP grew at a higher pace of 22%, which is, I would say, good growth in terms of the SIP. So that is the SIP part. In terms of the EBITDA margin also, EBITDA margin has been in the range of 50 to 60% in last few quarters. So in terms of the margin also, they are stable, they are not growing or they are not decreasing. So that is the point. And in this industry, the decrease in EBITDA margin is the chance of decrease in EBITDA margins are fairly low, because with the higher volume you only improve your efficiencies. So that is why in this industry the decrease of EBITDA margin is fairly, that is a low chance. Okay, so that is the thing with this company. And if we compare all these companies here, so who is the winner, who is the number one? I would say obviously in terms of the growth, Nippon has been the number one company in the last few quarters, and in this quarter also Nippon was the number one company. Not about this 4, but top 10 also Nippon has been the number one. If we look at last few quarters, and in this quarter also Nippon was the number one in terms of the top 10 AMC. So obviously, as I say always, that market always rewards who is growing at a higher pace than the industry or the other peers. So here Nippon was the number one. So obviously, I am not giving any kind of a buy and sell recommendation, obviously, and I will not give any. But in terms of the performance of the business, obviously Nippon was the best AMC in Q1 FY26. In terms of the valuation, if we compare the valuations of the all companies, I would say HDFC is trading at a rate of 50x PE, mainly because of the brand value of HDFC. Nippon also, I would say, trading at a fair level of 40x. And then obviously Aditya Birla and UTI are trading at a much lesser PE because of the business. Okay, they are not growing at a higher pace. So how they will get the higher PE? No way they will get the higher PE. So that is the point. Obviously, we have to track all the companies in the future, that what are the business, what are these all companies are doing in terms, not only in terms of AUM, also in terms of the EBITDA margin, PAT margin, then comes ROE, in terms of the SIP inflow. All are the important parameters, but the main important parameter is the AUM growth. Okay, so that is the main parameter. We have to track it every quarter, that which is growing at a higher pace. But in this quarter, in the quarter 1 FY26, Nippon was the number one company. So that is for the video. That's it for the video. So thanks for watching.